Hi, I'm Naga Praveen. You are watching video lectures on International Public Sector Accounting Standards. In this video, I will talk about basis of accounting, both cash and accrual basis of accounting. Before talking about basis of accounting, first I'll talk about the definition of accounting given by American Institute of Certified Public Accountants. They defined accounting as art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are of financial character and interpreting the results thereof. Accounting is an art. American Institute of Certified Public Accountants defined accounting as an art of recording. The first thing that we need to do in accounting is recording the transactions and events. This will be done mostly in journal book or journal register. Please note that we record only those transactions and events which can be measured in terms of money. In a public sector enterprise, there will be lot of transactions and events occur in a day. But we record only those transactions and events that can be measured in terms of money. Once the transactions are recorded, we need to classify them based on their nature. Based on the nature, we'll need to classify whether it's an expenditure, whether it's an inflow or outflow. Then once it is done, we will summarize these transactions and events in a presentable manner and we prepare financial statements. Once the financial statements are prepared, we can interpret the results from that financial statements. Basis of accounting. We have two alternate bases of accounting, one cash basis and another one accrual basis. First I'll talk about cash basis of accounting, then I'll deal with accrual basis of accounting. In cash basis of accounting, we record transactions and events only when cash is received or paid. Only when cash is received or paid, we record transaction. So in this case, there may be a time gap between the occurring of transaction and payment of cash or receipt of cash. Transaction may occur in 1 year, payment may happen in another year. The payment may happen in advance before occurring of transaction, but we record transaction only when cash is received or paid. The main focus in cash basis of accounting is cash and cash equivalents. The financial statements prepared under cash basis of accounting provide information about sources of cash raised during the period and the purpose for which cash was used and cash balance at the end of the reporting date. So the main focus on cash basis of accounting is cash. IPSAS-B has issued a separate standard on cash basis of accounting. We have a separate lecture on cash basis of accounting. In that I will discuss more about cash basis of accounting. Accrual basis of accounting. In accrual basis of accounting, we record transactions as soon as they occur, not when cash is received or paid. In accrual basis, we record transaction in the period in which they occur. This is the main difference between cash basis and accrual basis. In cash basis, the focus is on cash. We record transaction only when cash is received or paid. In accrual basis, we record transaction immediately when they occur. In cash basis, we show cash balances, cash receipts and cash payments. In accrual basis, we show in financial statements the following elements: assets, liabilities, equity, revenue and expenses. In accrual basis, cash is part of assets. It's not the main focus. The focus will be on total assets, total liabilities, equity, revenue and expenses, not just cash. IPSAS-B has issued 32 accounting standards for accrual basis of accounting. I will deal with all those standards in my rest of my lectures.